As investors seek sustainable returns, environmental, social, and governance considerations have become a vital part of investment decisions, especially in the REITs market. In Singapore, the government's roadmap towards sustainability is pivotal in shaping the future of real estate investments. With the Singapore Green Plan 2030 and a drive for greater transparency through ESG disclosures, REITs must now demonstrate resilience and adaptability to these evolving standards. This video will explore why integrating ESG into your REIT strategy is no longer optional, but essential for future-proofing investments.
So let's think of a REIT's income statement or P&L to better understand why ESG is important for REITs. We start with revenue. So as we know, for a REIT, the main revenue item is rental income from tenants. And increasingly, tenants, especially the big multinational tenants, which are the ones that most of our REITs would want to have as tenants in their portfolio as they pay the best rents, these tenants are requiring that the buildings that they occupy have some minimum green credentials. Some have more than minimum, so there is a certain baseline credentials that now is expected of landlords. Because all these big multinational companies have their own targets, which also involve leasing green properties. So in other words, if as a landlord, you don't have a building to offer with a green mark in Singapore or a neighbor's rating in Australia, then the REIT will not be able to get good quality tenants or even retain their tenants who currently are there when their lease comes up for renewal. And as rental income is the bread and butter of a REIT, so this is like really important. REIT managers absolutely need to make sure that they make their buildings as green as sustainable to get the green certifications so that they are in the radar, in the reckoning by companies to lease their properties. That's really how important it is. And this trend is not going away. It's only going to accelerate as the years go on. So that's the revenue side.
We are seeing that investors or even to some extent tenants are looking for buildings that is more future-proofing and very strong green credentials so that in that case they themselves need to tick the boxes when they actually do their own sustainability reportings and all those things. I think it's easier for them to sort of be able to fulfill some of these criteria, and also at the same time they know that they are working with the right parties or they are located in the right locations, that the owners are also supporting the initiatives to sort of push this forward and help to actually grow on these areas. Everyone knows that we have a portfolio of assets and 3 of the buildings actually is located in Europe, Milan. For us, I think what we have observed is that tenants are getting more serious about looking at properties that they can locate, especially when the terms are grade A buildings, basically buildings with very strong credential. You can see that the movement of getting towards green and the elements of having a green features in the buildings is very important. So we believe it is important for us to invest in the right properties, and the properties has to have a very strong green potential, and at the same time they should have a very good roadmap for them to achieve a better saving of energy, better saving of waters, and how they can future improve themselves. And that will strengthen the portfolio and give the portfolio a stronger element of values in the futures.
Let's now think of the expense side. One of the key areas that REIT managers have been focusing on is energy saving, because as you know, electricity prices have been high, and if done properly, there's a fair amount of energy savings in the bills that can be done. And how can this be done? You just have to do an energy audit, you have to install new energy efficient features, use sensors to reduce energy usage and so forth. So there are systematic ways in which this can be done, which will reduce your electricity expense, which will obviously reduce your operating expense, which obviously then flows down to higher distributions to unit holders. And electricity is just one example. The third item to think about is the cost of capital. Like any company, REITs require debt, they require equity, right? We have 2 sources of funding. So it's really important for a REIT to access debt financing. Let's think of debt first. So cost of debt, let's think of bank loans. Now, most banks have now got their own green lending targets. They want to lend to companies that are on a credible path to greening their business. which means as a recipient of a bank loan, I had better be on that path to be able to get these loans from the banks. Then on the equity part is interesting because so far, while equity investors have been quite vocal, the companies that they invest in should be sustainable and green, we haven't really seen that impact so much in their stock prices. But I'm very sure it will come because more and more funds are being launched with an ESG tilt. And even traditional equity funds and fund managers are adding an ESG lens on top of their financial lens when they are investing. This is just part of the mega trend that is going on. Equity investors will also increasingly invest more and more of their dollars on REITs that are on a credible, stronger path to green, to sustainability. If more investment dollars come in, the unit prices will do better. If the unit price does better, that lowers their cost of equity, lowers their cost of capital, and makes the REITs more competitive. So overall, if you look at it from a revenue lens, an expense lens, or a cost of capital lens, having a sustained and sensible ESG strategy is really critical to the survival and competitiveness of the REITs. What does it mean for the Singapore REIT industry as a whole? Singapore is a high-quality brand name. That is why investors come to Singapore. We are a global investment hub. And ESG is just a metric to show that these are high-quality companies. Because if companies and senior management and boards are thinking about the future in this kind of a strategic way, then investors also have the comfort that their money is placed in the right place.
But are there additional costs to unit holders?
Anytime something new is being done, there's always a concern, right? Is there a cost? The question is there a cost if the REIT does not do anything? Let's say a REIT just says, I have been running my business, leasing out my spaces, managing my properties. I just carry on, why change? But the reality is that if you don't change, then it will hit you on the revenue, expense, and cost of capital side, as I just explained. If a REIT does not do it, they will be penalized. If you do it, you are on the sustainability path and you do it well and with conviction, you will be rewarded. If not today, certainly in the next 2, 3, 5 years. There is a real opportunity cost. It has to be looked at from that lens. As an investor, do you want to be investing in a company that is doing things the old way? Or do you want to be in a company that is thinking forward and putting their resources in a thoughtful way of what is required by investors over the medium term? So that's how an individual retail investor needs to think about it.
I think basically there will be no additional cost to unit holder if you will be able to execute your initiative well and also in a way that align the interests of the unit holders at the same time. So what we are actually looking at is how we can actually find the source of income, for example, to some kind of loan like sustainability links loan, wherever. With that source of income, we will be able to finance what we actually need to do to improve on our sustainability initiatives. So with that will benefit the unit holders. At the same time, we sort of position ourselves and future-proof ourselves to improve on the performance of the asset going forward.
For the S-REIT sector as a whole, ESG is important. For individual REITs, ESG is important. So this is the way forward and the trend will only continue as the years go on.
I tend to look at it as a journey that we need to undertake as we run the business. Be it on a good time or a bad time, I think you need ESG elements to actually sort of strengthen your business structure and strengthen the business way of doing things. And through the process itself, you will be able to get a lot of stakeholder support because you are going to prove to them that you are able to do well at the same time, do good for the societies, and you are able to align the people, the planet, and the profit. For example, ever since we get listed, we have been recognized by GRESB for 4 consecutive years as top winners for the retail sectors, and also we are the global market leaders for the retail sectors, I think on the 5th year. This is what we have achieved, and this is where we actually sort of chart along at the same time, fine-tune ourselves and make ourselves the leaders. I think that's what we are looking at.
As Nupur and Kelvin pointed out, ESG plays a critical role in managing REITs from the income, expense, and capital perspectives. Let's keep investing in a sustainable world. I'll see you in the next one.